state awards with MCO contract approval. This was a finding in the previous year for Western Highlands. It had to occur again because that finding was found after the date, so they didn't have time to fix the finding within that 3-month period from July 1st to September 30th. I believe Smoky's procedures and such would abide by making sure contracts are approved before and not after the fact. The other finding had to do with claim submission, of making sure consumers are approved in NC tracks before submission. That is more of an issue related with NC tracks itself. It's just a finding, compliance finding, and I guess you could say it's their fault, but it is a finding. No other issues that we bring to your attention. No, what's a general recommendation since the entity is no longer in existence. The other letter I want to give is just a communication letter. And this is a standard letter, pretty much near the same points as your Smoky's audit. It describes in there, it's this financial presentation in the letter, it describes what it's really presenting since the organization is closing itself and transferring to Smoky. We believe the IBNR calculation, or what the liabilities were at the date of transfer to Smoky and what needs to be paid out, seems reasonable based on activity from January 24th to the present date. All adjustments were corrected. There was many adjustments, I would assume, say, in the last 2 months based on our audit procedures and the time frame from that date, January to now, and working with Smoky's. You see, when you close your books and you seem to find little things come out of the woodwork, and then all those little adjustments, those payables, receivables that aren't being collectible, so all those were fixed, corrected in the number. So the number presented is the final number that we believe is correct. And that's pretty much it with the audit.
As a general statement, I would say following Smoky Board and Western Highlands as well went into this not fully knowing, kind of opening the door and not discovering or having the light on until we were in the room. Quite frankly, from a revenue versus expense basis, from reviewing all of the claims and the legitimacy of those claims, the organization came out, the Smoky after the merger came out better than could have reasonably been anticipated at the time. It is amazing to me that one would have gone through this and for the first months of operations come out with a net surplus for it. This is significant and could not have been predicted when this merger came out. So this is a good thing. I would say from a person walking through the door, having a number of accounts receivable written off to me is a little on the exceptional side. But again, given the extraordinary circumstances of how this merger occurred, it's certainly understandable. There were a lot of claims issues that fortunately we were able to resolve. It was an extraordinary effort to resolve, specifically with some of our larger partners. And again, this came out clean, which is an exception given the circumstances that transpired.
Now, unfortunately, we don't have any members of this committee that are or were former Western board members, but certainly I would ask, for the presentation planning to make it to the full board to emphasize, you guys, I guess, as well, and to the extent you can have a kind of neutral statement about this. It's pretty unique situation. Not having a very good idea of what we were getting into. And we were very consistent in our stating of that to the Western Board. We had the issue with the inability on the Medicaid side to report claim activity in the way the state wanted. Some challenges around changes in data around payments. We don't need to go into at this point that we reached an agreement with the state on, and it was some pretty unique stuff. And sometimes it's good to be lucky.
This has all been resolved at this point now.
This is the final chapter. It's something everybody has been waiting for. And again, I can remember different conversations about the Western Board and whether or not they needed to stay intact until the audit was done. And they were very, I think, appropriately sensitive to the responsibility there. And then I think once we got to the agreement or the sign-on confirmation of the merger by the secretary, they kind of recognized that there was no more Western Highlands and it was all just smoking. But the other part, again, the thing that sticks out to me, Fred talks about the AR. One of the promises we made was that we were going to pay all the providers that were owed money, and we did. And we've been over backwards for a long time to do that. It was hard. I got to give Steve Wood, another comment. I would say we would not have been able to do this without him. I think it's that simple. I never had a chance to meet him or talk with him, but he kept that whole thing going, and very critical staff from Western to keep paying those claims and do that. And the fact that we end up with a write-off of $700,000, $800,000, $900,000, whatever. That's, I don't want to say that's nothing, but that's kind of nothing. Let's go with it. So that's my kind of executive opinion. Don't sweat the small stuff.
Okay. Good. I'm Wayne Terry in Clifton, Marston Allen, and Charlotte. Jeremy Hicks is the engagement partner. We're going to split the thing up. He'll start off, and then I'll get into a few nuts and bolts.
I think everybody has a packet in front of them. I know it looks pretty thick, but I'll assure you we are not going through all this information today, so don't want anybody worried about that. But as far as what we do have in your packet, we're going to go through our required auditor communications. Then Wayne's going to go through kind of a high-level discussion of the financial statements. Now, you also have the full draft version of your financial statements behind that last tab in your packet, tab G. We'll touch briefly on some communication and internal control-related matters, and then really the other tabs in your packet here are really just more for your information. There's some information on some industry and accounting trends, some other stuff to take a look at. I guess it kind of has more of a kind of healthcare focus, but given the scheme of things and what's going on now, I think a lot of the stuff and information here is pertinent. So just some information in the back for you to take a look at. Behind tab A, our required auditor communications, our responsibility is to express an opinion on the fair presentation of the financial statements. As with the other audit, we do have an unmodified opinion on Smokey's financial statements, which is the highest level of assurance that we can offer. We do plan to perform the audit to obtain reasonable assurance that the financial statements are free of material misstatement. As part of our audit procedures, we evaluate internal controls. We use that along with our risk assessment that we perform during the planning stage of the audit to kind of set up our substantive procedures or the meat of the procedures that we perform while on field work. We do utilize a risk-based approach where we focus on the risk areas for the organization. As far as significant accounting policies go for the organization, management is responsible for those policies, and they're outlined in Note 1 to your financial statements. There were no significant changes in accounting policies, no new policies adopted. One of the many, new disclosures for you It's going to talk about the merger and kind of show the reconciliation of the items that were transferred over from Western Highlands. That's included in note 4 to your draft financial statements. As far as significant accounting estimates go, the main estimate reported by the organization is the liability for incurred but not reported claims, or IBNR. We do quite a bit of testing around that as far as with our audit procedures. Based on the testing that we perform, we do feel like that estimate is reasonable. And all other estimates used and reported by management within the financial statements appear reasonable based on the procedures that we perform. Flipping over to the next page, we did have some audit adjustments with our procedures during the year. I think there were 12 in total. You can see the impact of those on page A2. Also had a couple of reclassification items that we made, mainly related to the conversion of the financial statements to have a full accrual accounting. We had no unreported or past audit adjustments. No disagreements with management. We want to thank Smokey's team for their help during the audit process and continued help as we work on finishing these things up here over the next few days. No significant difficulties encountered. Again, one of the difficult items was here, I guess, toward the end of the process, and it was just reconciling the amounts between that were transferred between Western Highlands and Smoky. As Dan mentioned, I think we're at a point now where we're both in agreement. And again, our financial statements, I don't think we mentioned this earlier, are also in draft form, so it should be the final numbers as with Western Highlands. We did have some consultation, obviously, with other independent accountants as we worked with Dan and his team to reconcile the transfers between the two organizations. Other than that, really no other issues or findings to report.
Yeah, I mean, we were working up until last night on these final two entries to get the transfers reconciled. And actually, we were trying to figure out, did it go on Western's books, did it go on Smoky's books to get things squared away, but I think we've got resolution on that. This is my 6th murder in the last 2 years. I'm only 20 years old, but you see what
Where's yeah? You think it's hard for you?
I can assure you, you got it worse. I can't get along someday. The next section is a discussion on the financial statements. As I met with the management team on Monday, and went over this, the sections of the audit, main sections are the audit opinion, the MD&A or management's discussion and analysis, the statement of net position, which is the accrual basis balance sheet in the for-profit world, statement of revenues and expenses, changes in net position on the accrual basis, cash flow statement is an agency fund statement. That agency fund transferred over as a flexible spending account, the plan that was transferred over from Western. That's new in the statements this year because you did not have an agency fund before. The notes of the financials, the supplementary schedules after that to comply with the state North Carolina general statutes to report on a budgetary basis and compare budget to our actual to budget on a modified accrual basis. That's the next section. The required supplemental information and notes related to other post-employee benefits, that's health benefits type, single audit section, and that's the last section of the audit. Again, we did have an unmodified opinion. The statement of that position indicates a continued improvement in financial condition. Your unrestricted cash balances at year end equated to 113 days of operations based on 2014 operating expenses. That's up from 73 days in 2013, but also reflects the additional liquidity that you had because of the merger with Western funds transfer. Your unrestricted net position was approximately almost $57 million, which is about 20% of the 2014 operating expenses. That was 11% in the prior year. If you combine net accounts receivable with cash, there are about 119 days of operating cash and receivables available to meet obligations. Net revenues were over budget. Operating expenditures were under budget. Revenues increased from about $150 million over the prior years, and expenditures were up about a little over $132 million. Again, those big increases relate to the period after Western Highlands came into the organization. Revenues exceeded expenditures by a little over $24 million. We administered almost $56 million in federal and state assistance. It's about double the prior year. No material instances of non-compliance with laws or regulations. No findings related to documentation of medical records. We did have one significant deficiency in internal control, and that relates to some of the items that took place towards the end. We made a recommendation at the management meeting the other day that you move away from, I'll call it a hybrid system of accounting. It's not true modified accrual, it's certainly not full accrual. It's closer to cash related to accounts receivable. We're asking that you really consider moving to accruing all of the revenues or receivables and payables as they take place during the year, even if you have to estimate some and clear as you go along. And one of the big issues this past year has been the differences between P and PM with what you're getting, what the state says, and that's a big amount out there. You can theoretically estimate what that number is, so you can track what they're paying between the 8 and I forget the numbers in this report that you were talking about. We think that will put the pressure on you to monitor receivables and payables more closely so that things take place automatically each month rather than a lot of it taking place at year end and a lot of swings and adjustments. The information is still being done internally, it's just being kept in subsidiary records rather than actually being accumulated in financial statements or internal, full internal financials. Again, we appreciate the management staff and their assistance. I thought I was through back in early September when I had a final meeting with Lisa and Silva. I thought we were fairly close, and then I got an eye opener later. But we got through it.
Who says the county time?
That's what I told Amanda this morning. I said, "Isn't funny, county funny?" That's basically our high-level presentation that we'll give. I mean, any particular questions, issues that we can address?
Can you address what's approved timing from firms, state and federal funding levels with your friends involved?
We use the final mass report, as the state report coming out to do that. It's very close in the report. We try to stay out of tracks knowing there were so many errors and issues in there. We didn't trust that we'd be audited back information, so we use your internal billing records, your accounting records, your client information to do our sampling and testing. We did not confirm his receivables. Felt like the numbers moving anyway, even if they confirmed it. So what? That doesn't mean that they can't change their mind again the next day if they find out it's a different number. The last letter I looked at, the total statewide number was about 50 million. Brian said the other day it's crept up to about 60 million. So,
I'm
This
just
is a little
ballparking
hard.
it. Yeah, I'm just ballparking these down. Everybody's accountability. What do you think we ought to do about that?
That's a good question.
We want to get our money's worth today out of here. Get some good advice.
File a lien. I don't know that that would go in small claims court though. But I don't know, the issue, it just keeps going on and on and on and No. I guess I backed into this stuff 15 years ago, and sort of crazy said, I'm gonna stick around after retirement, see how it works out. I'm not sure I can live that long.
Good point.
How long do you think it'll be before that issue is resolved? Years, I mean, how many?
I don't know. I do not know. I did happen to meet, I live in South Carolina, and I've been an 8-year board chair, one of the DE organizations down there, so I've met some of the folks in South Carolina. One who happened to be the deputy director of VOS, who came from Louisiana. He worked with her down there, and he's done great. If they're both on the same track, things will get worked out.
Any questions? Thank you.
Thank you.
Thank you.
We're done. Very much appreciated. They'll be redoing their performance at the full board.
Look forward to that.
Don't go to sleep.
All right, trying to. Okay, updates. Who's going to do those? Richfield update?
Just a few things. Clearly, we're in the process of renovating the site. All the bids have gone out. They have been returned. The major bids, you think, what are they? They're the generators. There has to be a backup generator. So we will have full supply, specifically the data system and some ventilation kinds of things to keep those systems going. Security, the wiring is necessary in order to do that. Data lines, telephone lines, all of that is figured out. There is the construction company itself, which has a relationship with the actual owner, is doing much of the on-site work. Cabinets have been ordered, the carpeting clear, the colors that will go on the walls have been done. Made progress in reference to some of the furnishings that needs to take place. I think if you talk to the owner, the targets and have us move in by the end of January, I think that's kind of on the optimistic side. We'll do a move on a phased basis so that units will move probably across a 2-week period, if not longer, when places are organized. But things are proceeding. Okay, questions? I kind of talked about the indicated accounts receivable at some length. One of the things I try to do is hold on to the concept of hope. This is one of those things that DMA has to resolve. We are a major agent of their work, meaning ourselves, the Smoky, and the other MCOs within the state. If you had a vendor that you were owed $16 million, that relationship would not last very long. While I understand this is an extraordinary relationship between units of government, this is not supportable in perpetuity, so it will have to be resolved. A logical question of me or any other CFO is how much of this is actually collectible. In my estimation, it will probably be a 90% mark thereabouts. There will always be something that they will find to counter our target. But the bulk of our argument is still sound. When it gets resolved, I think it's easy. I would hope that by fiscal year end, we'll get at least a means to come to a resolution, but I can't give you a deadline. I have no idea.
Let me give you my prediction. And that is, that before the General Assembly comes to town, they're going to want to have this off the decks. Because it's you don't have a leg to stand on. And there will probably be an effort to have us reach some settlement, some agreement based on adding and subtracting and who knows what. Because I think
think you're gonna negotiate a figure as opposed to the real figure?
They
Just
just,
to get it up.
yeah, I think that's about it.
And I think you're probably right.
Do you think they're ever going to be able to get the bottom of it?
In the short term, meaning the period that we are in, is this financially affecting Smoky? No, not really. In the longer term, would it? Absolutely. I think where this affects us the most is in the AFTC category of aid. And that's significant because it's the largest category of aid, although not necessarily the highest PNPM for that particular category. It is not something that is sustainable over time. But as we stand now, with our cash position, this is not a functional issue, meaning affecting operations and budget.
Just, if we take Brian's scenario and say that comes to pass, then what? We start all over, we dispute it. Well, it never, it's kind of like what Fred said.
Don't go away.
It never ends. Fred says it never ends.
Well, you know, you probably heard that analogy to somebody digging a hole for themselves. I don't think the shovel is out of their hands yet. You follow me?
Yes.
So, you know, it would just draw a line on where it is for now. And say, okay, here's the deal. All of this other is forgotten, and we start back at zero.
I think it looks good for us today.
To be honest with you, I don't think there's anything else they can do.
Probably right. I agree with you on that.
I'm not as close to it as, you know, some other folks with resume have too much order. Probably doing the same I do. I don't think they are able to validate any kind of methodology to say for sure. I mean, you know, it's the analogy I make with this is it's kind of like, you know, that statement you get from your bank every month. And what if the bank stopped sending you a statement and couldn't tell you for sure how much money you had? And you had a record of how much money you think you had. And at some point, if they couldn't tell you how much money you had, you'd have to go down there and say, well, let's agree that this is how much money I got. I mean, am I far off? No. So, that's about it in layman's terms.
Well, don't you know that they know that also? And that's probably in the.
Don't want to have to say it out loud.
Up there, yeah.
And hasn't the issue really, 18 months ago, it wasn't this problem. It's developed really in that time frame.
And see tracks. How about that?
Anything else, any other items? Fred?
Not for public consumption.
Okay. Anything else? No. Okay, there's no other business for the finance committee. Is there a motion to adjourn?
So moved.
Have a motion and a second. All in favor, say aye.